Hi guys, welcome back to Father and Son Investing. Today I want to revisit one of my stocks that I really like, SoFi Technologies. Quite honestly, I've been a little busy with the process of moving. That process always has little hiccups that take place along the way, and so I haven't been paying as much attention to my investment account. I missed when SoFi recently dipped below $15 a share. That was my favorite buying point, as I've mentioned on videos in the past. Anytime it dips below 15, I think it's a great buy. Is SoFi still a good buy now? Let's talk about that. We're going to talk about what SoFi does, just a quick recap in case you're not aware. We're going to talk about its three sources of revenue streams, and we're going to talk about what the stock price prediction is for SoFi. We'll talk about what some of the pundits have to say about SoFi, and I'll give you my opinion at the end. Stick around, all that, and maybe some more. All right, just a quick 2-minute recap of what SoFi does. SoFi Technologies. Originally, it was a lending company. It got started doing student loans. It was crowdsourced, financed from alumni of the universities that they were working with. They managed to pull that off very well and continue to increase the amount of money that they were able to get from alumni. They were doing quite well as a company until in 2017, when the CEO at that time had some scandals occurring that really affected the way the company was doing business. That CEO left, and the board made a very good choice of the follow-on CEO, Anthony Noto, who, if you're not familiar with him, he is a West Point graduate. That is the military academy in the United States. He was an Army Ranger. After his time as an Army Ranger, he went to the Wharton School of Business. He then was at Kraft Foods for a little while, moved on to an investment bank. From there, he moved on to the NFL as the COO, and eventually to Twitter as the CFO and COO. He was recruited by that board and took over the company in 2018, totally changing their culture. He gave them a mission, which their mission was really to help people make their money work for them and make good money decisions. And so all of these things that you see here now have been branches of the company that Mr. Noto really has emphasized or created. SoFi was a private company until recently, when it was announced in January that via IPOE, that is Chamath Palihapitiya's SPAC, they would become a public company. That happened just about the 1st of June, and since then has been trading as SoFi. Now, you can see that the stock price had done really, really well, getting up to about $26 a share. It took a dip just before they went public. That's when I was buying some more shares as it got below its $15. Went nicely back up into the $22-ish range. And then you can see this rather steep decline taking place. What has been going on with that? Well, the special purpose acquisition agreement had some unusual provisions for the lockup. Now, if you remember correctly, when a company goes public, there will be shares held by insiders that have to be retained by those insiders for a designated period of time. Often it is 180 days. Well, the provision in this particular agreement stated that if SoFi stock traded above $12.50 for any 20 days of a 30-day period, 33% of those shares could be released. Additionally, it stated that if SoFi stock traded above $15 any 20 days during a 30-day period, an additional 50% of those shares, those lockup shares, could be released for sale. So we're looking at 85% of the shares suddenly becoming available long before the 180 days. 180 days was the designated lockup period, but due to those provisions, we can see that the stock was trading well above those levels for all of June. That then triggered it, and with all of those extra shares available, the stock price took a tumble. I see this as a great chance to buy SoFi. Let's just cut to the chase here. What do the analysts have to say? Well, SoFi is a relatively new stock, and so right now there are only 2 Wall Street analysts covering the company, but we can see that those 2 analysts are saying that their projected stock price has an average of $26.50. That is a 56% upside compared to its current selling price. So why are analysts bullish on this company, and why are so many pundits bullish on this company as well? In fact, Jim Cramer the other day essentially said, just buy SoFi. He can't understand why the price is so cheap. SoFi is essentially three companies in one. They are a lending company, that is what they are very, very well known for, and the lending company is very profitable. They are also a technology platform. In 2020, they bought Galileo. What is Galileo? Galileo has been around since about 2011. It is the API standard for card issuing and digital banking. You may ask, what is an API? API stands for Application Programming Interface. Think of it this way. You as an end user are using an app. The developer of the app writes some programming, and that programming needs to be able to talk to a database. The way that it's going to do that is through the Application Programming Interface, an API. So the programmer is not actually talking directly to the database. It is this API that is just getting the information from the database and then bringing it back to the app. Another way to think of this would be as if you were going to a restaurant and were going to order something off the menu. Of course, it is the people back in the kitchen who would be making the product, but you can't communicate directly with the kitchen. You are going to give your order to the waiter, who acts as the API, who will then talk to the people at the kitchen. People at the kitchen will make your order and bring it back to you via the waiter. That is what an API does. Now let's look at this in terms of business. So we have a company here, Bolero. They have multiple different revenue streams: insurance, banking, buyers, carriers, logistics, etc. They're going to have a web-based customer who is using their interface, and that customer needs to be able to query a system which is on the back end, the back office, and be able to get that information back to them using their web-based interface. That is going to be done with an API, and Galileo is the big provider of these in terms of banking. In fact, the former CEO of Galileo said that in 2020, 95% of these financial services, these banking services streams were being performed using Galileo APIs. So how does this look? Well, if you're using Samsung Pay or Google Pay or Apple Pay, you are using one of the Galileo APIs to be able to do that via your phone. So that is the second business platform within the SoFi umbrella, Galileo. They also get 1/6 ownership of Apex Clearing. Then finally, they have financial services. By the way, the technology platform is already profitable. Financial services, that is where they have been expanding. They now offer investments. They offer SoFi Money again, which is the banking, essentially, credit card, Relay, which is similar to Mint, if you're familiar with that, in terms of helping you understand where your money is going and how you can do a better job of managing it. SoFi Protect, which is getting to insurance processes. Now, it is this last portion of the company, the financial services, which is not profitable. In fact, it is very much not profitable. Here's a nice table that emphasizes how unprofitable at the moment the financial services is. 87.7 million in contribution profit for the first quarter of 2021 from lending, 15.7 from technology, and a big fat almost $36 million loss on financial services. However, take a look at the growth. That is where the big growth is happening, is in financial services. So SoFi is essentially investing a lot of money into financial services, knowing that eventually this growth is going to start to generate profit instead of losses. We're looking at as soon as 2025 when that can start to really be effective. So why do I think SoFi is a buy? It's the growth that's taking place with these guys and the leadership that they have in place. Let's just take a look at this growth. 7 consecutive quarters of accelerating year-over-year growth. Just back in 2019, they only had 704,000 members. Now they went past 2.2 million during the first quarter of this year, and they're looking to have 3 million by the end of the year. This is fantastic growth, and you can see that it's accelerating as you go. We were discussing Galileo earlier, and Galileo is still on that same kind of growth pattern, 100% year-over-year growth the last 3 quarters. Look at this. Back in 2019, only 17 million accounts, now 70 million accounts, and 11 million of those were added just during the first quarter of 2021. Now, I showed you earlier the lending, of course, is the vast majority of the revenue stream for SoFi at the moment, with the technology part, the Galileo part, taking up a decent share of that, and the financial services just a minimal amount. But they're looking at, by 2025, really trying to balance these out, making them almost 1/3 each of the revenue streams. Now, how is it that they're doing this? They changed their culture back in 2018 when they hired Mr. Noto, and he gave them actually a mission to help their members learn to manage their money. One of the ways that they're helping members manage their money is by giving them a one-stop shopping place to do all of these things. By having members who use multiple products, they bring down their customer acquisition costs and thus drive up their profits. One last mention for SoFi just before we wrap up. I mentioned earlier their leadership is another reason why I think SoFi is a buy and why I'm excited about this company. Of course, Anthony Noto is the CEO, but they have a wonderful leadership team going in here. He has sought out a world-class management team to combine expertise in technology and financial services. What's ahead for SoFi? Well, in 2 days on August 12th, they will be discussing their second quarter results. I'm excited to see what happens here. What is also ahead for SoFi? Well, they are still working to get this bank charter finished. They actually bought a bank in the Sacramento, California area back in the spring. They had previously applied for a bank charter and had received conditional approval, but we're still waiting on the FDIC. You really can't run much of a bank if you don't have the insurance to go with it. They shortcut that by purchasing a bank, essentially. So I'll be interested to hear if Mr. Noto has any updates on that end of it as well. Once they have that bank charter in place, it's going to do a couple of things. It will, one, bring down lending costs for their members, which is obviously something that they want to do for their members. And two, it will bring down the cost of capital for SoFi, which will increase their profit margins. That's it for SoFi. Stay tuned for August 12th. We'll hear what they have to say. $16.91, not a bad price. I'd love to see that come down just a little bit before the Q2 results come out. Again, I love it when it hits 15, anytime 15 or below. That's a buy point for me. I don't know that we're going to see that very often anymore with SoFi, as evidenced by what the two Wall Street analysts are having to say. They're looking at a price target of, again, right around $26.50 with a high of $30. As always, keep the young people in your life interested in investing. Teach them all you can. Until next time, enjoy your investing.